Good afternoon, everyone. Happy Friday. This is the 24th of March. Hope everybody had a great trading week. Gabe Velazquez here with you, transparenttradesolutions.com. Let's go ahead and get started. Welcome, everybody, for those that will watch later as well. Let me just first start off with I have a class coming up on a week from yesterday, Thursday. What's that? I think it's the 30th, right? So if you, we're going to deal with implied volatility, one of the most important aspects to the options market, which is very important for you to understand. It is a complex formula, but we'll simplify things for you and get you some strategy and so forth. So again, that's Thursday, this coming Thursday, 4 p.m. Eastern, Pacific. I'm sorry, 7 Eastern. Go ahead and sign up for that if you are wanting to attend. It is a free class as usual. So that's the first thing. Also, again, sign up for a newsletter. I did get some inquiries about our free kind of morning sessions. So you can also inquire about that. Support at transparenttradesolutions.com. Okay. All right, let's go ahead and get started. So, been a very sideways market. Not, I was with you on Tuesday, and we had the Fed meeting on Wednesday. They raised a quarter, and really, at the end of the day, nothing's changing. The bank crisis is still ongoing. There was a little relief today. There was a Deutsche Bank hit last night. They took the market down to 39.40, and now we're actually rallying. We rallied kind of algorithmic, very kind of just drift. If you were watching the market today, you saw it was just kind of a gradual, just kind of drifting higher, which is very typical when you have options expiring and algorithms, just pretty much algorithms running the whole day today, I would say, because under the surface, we still have banks were down. JP Morgan was down. We're trying to buy. We actually missed buying JP Morgan by about 30 cents. We thought we were going to get filled on that, so we just missed it, but that's okay. I don't think we're done with the banking crisis. So all told, we are simply in no man's land. S&P has made little progress, very choppy, very rangy trading, and I would just say, at the moment. 39, we had that low from, I think I mentioned this again, just like a broken record, because nothing really, we just keep, swinging back and forth, back and forth. 3,900 would be a level I would be looking at. That was last Sunday's low. We've actually had two lows. If you look at your chart, you have two lows at 3,900 on the S&P futures. On the top side, I would say 40, 4080, 4100. Looks like we may be heading back up there again. Kind of just drifting along no man's land. It's been frustrating unless you catch some little bit of momentum here and there. But other than that, it's just been back and forth. And one of the things, again, caution everybody, you cannot be chasing this market. If you chase it to the downside, you're going to get whacked. If you chase it to the upside, you're going to get whacked. You got to wait for rallies to sell into. You got to buy pullbacks. That is likely the best course of action in the S&P futures. Okay. Again, some type of rotation going on. Also, same thing with NASDAQ, 12,700 to about 13K. But what's interesting is, again, I think I mentioned we were trying to get short Advanced Micro, AMD. Came up a little bit shy on that one as well. 102 and change was the high yesterday, 102.50, something right in there. And then it came off pretty good. So under the surface, there's a lot of rotation going on. Semis are getting sold. Banks are still under pressure. So these averages are, especially the S&P is pretty much, again, I think all the confusion and I mentioned battleground between, everybody can still make a case for bears and bulls and whatever. So at the end of the day, I'm not sure what's going to get us out of this mess in terms of, overall, you still have to get the bulls, no matter what you think. You still have, if you were scoring, if you had a scorecard, you still have to give the bulls the edge. I know some people out there are always bearish and whatever, but just again, with no opinion or whatever, you still got to give the bulls the benefit of the doubt until we crack, maybe 3,900 on the downside, or even on the the Nasdaq. I think 12,700 is going to be an important level, and I do believe that there's going to be some further rotation, because it's almost like the Nasdaq or the big semi stocks and Nasdaq stocks have been almost like the safety trade, if you will, right? The safe haven trade. But if things get better, maybe they unwind that. It's getting to be a little bit crowded. So in a nutshell, 12,700 on the Nasdaq, and then 13K on the upside. We've got that 13,130 level that I mentioned. We came up shy. That's still okay. The Dow also big old ugly range. Nothing really changing from the last conversation we had. Kind of similar to the S&P, just big old broad range. Looks like 33,000 on the Dow is going to be the kind of first area that you can look at in terms of a breakout, and then the Russell also is down at the remember the level I mentioned last, around 1,700, I think, is the level on the Russell. So not a lot changing. Similarly with the bonds swinging all over the place. 10-year attempted a breakout this morning with the Deutsche Bank news, and then pulled back, still about 116. So even the bond market, big volatile swings. Let's call it 113.24 to 117 now on the 10-year. Big broad ranges. Similarly with the 10-year. So all of these markets in big ranges, and in those type of environments, you got to buy low and sell high. That's it, pretty much. And not, just to simplify things. And a lot of people that are kind of accustomed to chasing markets and doing all that are getting whipsawed right now, because you can't do that. So make sure you understand the environment you're in, and trade accordingly. And right now, in the environment that we're in, you basically have to be trading the extremes, and that's pretty much it until things change. And who knows? That's kind of almost been that's been the case really for now going on since last summer, really, if you think about it. All right, moving right along, we've got the dollar index did come off of one of our levels, 102. You can see that on a 8-hour chart. Came up to the 105, sold off pretty sharply. You can see that base rally on an 8-hour chart, right around 101.86 to 101.55. We bounced off that. And again, similarly, I think, the dollar's probably going to be in a big wide range as well, from about 105.50 to 102. So nothing really changing. I mentioned Canada. All the currencies gave back most of the gains from earlier this week. So also very similar. We do have peso and yen to look at. Peso's got a big gap around 54. The yen came right up to a level, but if it goes higher, it probably the level I'm looking at on the yen is around 79.56. So check that out. Other than that, really, that was all there is. And then gold, we had a really nice short in gold this week. Took profits at 48. I think I mentioned that. Rallied right back exactly where we shorted it, 2004, pulled back again. We did have some calls in Newmont that we sold for a nice profit. So, always with our members, we always try to get one good trade a week. And between the gold short from last Sunday and the NEM, that was our trade of the week. So gold, I think, was our trade of the week. Overall, we did really well with those. Not every trade works, but those did okay. So that actually was covered a lot of. Yeah, how you doing, JT? Good to see you. So yeah, gold is something that you still, I think, going forward, gold is a one of the few markets that's still kind of moving around, right? Aside from just the chop and all the back and forth range trading in the S&P. So I would definitely focus on gold. I think we still have more volatility. I believe maybe it's peaking right here at 12. We may get another downdraft around the 1900 level. We did get out of our mining shares today. In fact, we closed those out right at the end of the day. So maybe putting back those on, or maybe looking for a pullback into there's a big old ugly level in gold around around 1920 area. Yep. What's that? EH? Oh, ES. So you got a little there's a little momentum. Today was just algorithm, right? They took it down last night, right, JT? Took it down from the I guess the Deutsche Bank and then just kind of just drifting. I mean, it was just kind of clearly algos, right? You if you look at your chart on a 5-minute, it was just like a steady you know what I mean, right? Yep. It was all algos today. Everything was algos. It was just you can clearly kind of just running that thing up, squeezing all the shorts out. There's a lot of negativity right now as well. So maybe that was it again. Maybe it's options expiration or whatever. So, anyways, kind of sitting in no man's land. I think. Yep. So we'll see. We'll see how that goes. What's going to get us out of this mess, really, if you think about it? I mean, unless you're trading some short-term volatility, some short-term kind of momentum, and at the extremes, you do okay, right? If you go down so I mentioned 3,900 is going to be another level, but anyways, we'll see what happens. I don't think the banking crisis is still not over. I think there's still one more kind of shoe to drop. We've been monitoring KRE. If you notice, KRE was down this morning, and then as it recovered above the 41 level, check out KRE. That's the banking index. As it started to recoup, that's when the S&P started kicking in. So watch that as kind of a leading indicator right now. KRE. If you're interested in that, that's we've been kind of monitoring that as a kind of a leading indicator. Okay. Copper also very interesting. Came off that 383 that I mentioned to you guys the other day. We are basically right up against 420, which is a resistance level. And then oil, we're still long oil. Kind of, if you track oil, you can clearly see it's in the last week, I'd say it's tracking the stock market. So you notice what happened. It was down sharply this morning. And then again, as the S&P started recovering, we got a nice little pop in that thing. So we are along that UCO. We are long oil, still holding above 65. We came up to that 71, 72 area I mentioned to you guys the other day. Pulled back about $3-4, and now we're heading right back up again. So as long as if we can break above 72.50, I think we got a shot at least up to 80, and that's kind of our target on this thing. Nat gas, not a lot going on there. Kind of just hanging around the 213, 215 level. That low at $2 is probably going to get tested. That's generally what happens with these things. So I do expect at some point we're probably going to test that $2 level on nat gas. That's almost a given. When that's different, but I'm sure there's and the question is it hold to, or does it break down and go down to the prior lows from 3-4 years ago to 150? I don't know if you guys realize, but nat gas was as low as 150 at some point in the last several years, right? So if you're thinking it's going to bottom here, well, who knows? And could it go down even lower than that? Of course, right? Oil went negative, as you all recall, several years ago. So you never know. Okay. And then lastly, grains. Those are markets you got to be looking at. I always come in here and tell you, look at grains. Wheat. Look at wheat, had a nice bounce off that 657. Soybeans got crushed, and now we're coming up to some really key levels after it sold off. There's not any buy levels that are looking great other than support and resistance, but this latest sell-off created some really nice opportunities to be shorting soybeans on a bounce. So these are markets that are actually moving and creating some really nice opportunities. I've been also talking to you guys about corn. Corn also looks like it's headed back up to some really great looking levels. And so we've been kind of focused on that, on some stocks. And again, in this environment where everything's choppy, everything's kind of range bound, you kind of pick your spots. You go under the surface, and a lot of these semiconductor stocks have been doing great. The banks, there's some opportunities there. We're trying to buy JPM. So there are plenty of opportunities, but you can't get kind of one-dimensional and get stuck on one or two things, right? You got to look around. So grains are a market that you definitely want to be looking at. Gold, some of the currencies are starting to perk up a little bit. And then under the surface, a lot of stocks are doing great. In fact, we've been kind of doing a lot more in the stock market with options and so forth, because again, futures, we had a really good trade on gold. And I think next week's going to be the same. Okay. That's pretty much it, everybody. I don't have it, again, I can sit here and mumble and rumble and whatever about stuff, but that's all there is. I mean, there's not a lot more to go. So just to kind of wrap things up, everybody, I'm going to have a class again on Thursday. So if you guys, if you're interested in that, go ahead and sign up on it's going to be about options, implied volatility, which is kind of a confusing subject. And it is actually the way they compute implied volatility is really complex. But again, it doesn't matter how they compute it, whatever. What matters to you as a trader is how can you benefit from it? What's your edge on that, whatever. And so implied volatility is obviously a very, very important level. So again, if you're interested, sign up below. It's going to be a free class. It's next Thursday at 4 Eastern. I'm sorry, 4 Pacific, 7 Eastern. I got to make sure I get that right. Okay. Other than that, I think that's going to wrap it up for the week. Hopefully you guys had a great trading week. But again, it's you got to pick your spots. You got to be super nimble in this market. And then, go out and find the right markets that are moving, and then not really get involved in stuff that's not moving. Okay. All right, everybody, have a great weekend. I'll see you on Tuesday. If you need, again, support at, let me actually put that in here. If you guys want, I actually have had a bunch of inquiries, support at transparenttrading.solutions.com. Okay, so you can reach me there. If not, have a great weekend, everybody, and I'll talk to you on Tuesday. Okay, take care.